Thank you so much for joining us for this episode of Leading Change. My name is Emma, and I've got Pat with me today. And we're going to be talking a little bit about the auto insurance industry as a whole, some of the trends that he's seeing, and how they're going to impact what we see over the next couple of years. Before I get into all the questions that I've got for you, can you give everybody a real quick introduction?
Sure. So I'm Patrick Sullivan. I'm the senior editor for Auto Insurance Report and Property Insurance Report, as well as the conference chairman for the Auto Insurance Report National Conference and Property Insurance Report National Conference. As you can tell, we're very original and thoughtful with our names. I've been doing this for about 15 years, starting in about 2008. Spent some time at some insurtechs and advisory firms. But for the most part, we write about what's going on in the auto market and what's going on in the property market. So excited to be here with you and talking shop.
So I want to dive into the auto side, obviously, as
Yes.
I already teased. And to get the conversation started, I want to talk a little bit about severity and frequency and kind of what some of the trends that you guys are seeing indicate about the state of the market in general.
So that starts with last year is probably the worst year for auto insurance we've seen. So our data goes back to 1988. We're able to, through some magic, look back into the 70s, and we can't find a year with a loss ratio worse than last year's 80.2%, which came out of both liability, where normally you see a lot of trouble. That was a 78.4% loss ratio, and physical damage just as high, actually higher at 82.7%. So, it was a rough year, and 35 states posted their highest loss ratio ever. Maybe it was worse in the 30s, but I can only see to the 70s. And it's been a real challenge on the severity side. That's a lot of repair. And then liability, I think I'll start there. There's a couple things happening. I think the first is some social inflation issues, which is kind of this nebulous term for what's going on with the courts. We always think of it as kind of there's a pendulum that swings back and forth between a plaintiff-friendly environment and a defendant-friendly environment, and we're moving towards more of a plaintiff-friendly environment if we're not already there. I think this is a bigger piece of commercial lines struggles, but it's happening in personal lines. And the emergence of is kind of complex network of litigation funding, where it's upsetting how carriers are trying to settle claims. People are able to get $5-10 grand ahead of time and are thus settling for additional costs because they're like, well, you're offering me $5 grand. I already have $5 grand. Let's see if I can get more. And that feels like a structural change. There's firms popping up supporting that. Policy limit search is something that's going on that's a little fishy that we're reporting on, trying to find what limits are before a court case starts. But that's been going on and I think driving up costs. But for me, it's also about a lot of external factors. So less about inflation and more about behavior. So if you look at what IIHS is putting out there these days, people are driving at way higher speeds and getting into more severe accidents. Even with all the ADAS technology in there, speeds picked up over the pandemic and have not slowed down. I'm not sure when you want to call it the end of the pandemic. I'd say probably spring 21, 22, somewhere in there. But people have kept driving at a really fast pace, and that's causing problems. But for me, the biggest driver is going to be repair costs. CCC's Crash Course, written by Susanna Gotch, has probably the best read on this. But parts per claim, per repair are up. Labor hours are up. Parts costs are up. Labor costs are up. I mean, just kind of across the board, it's more expensive to repair a car. You can't just use a wrench anymore. Between aluminum bodies, sensors, cameras, the need for calibration, it's just a way more complex vehicle on the road. And supply chain issues, which really kicked off during the pandemic, haven't slowed down when it comes to part replacement costs. And one of the things I was talking to someone on the glass side earlier today, and they were saying they're seeing 11, 12 weeks sometimes to get new windshields from one manufacturer, up to 6 months. And that's a huge safety issue. If you can't get a car back on the road because you can't get glass, it's sitting in shops, taking longer, driving up rental car times. So I think all of those things combined, that's what's led to the market performing so poorly.
So I want to tap into something that you just mentioned, and that's that idea of like the technology and complexity of cars helping to drive some of this up. And I want to kind of segue our discussion into looking at that idea of like how automakers themselves play into the cost and the repairs and severity and these things like calibration. Yeah. How does that play into everything?
It's been interesting. So I think for the longest time, the relationship has really been between body shops and insurance companies. and insurance companies kind of mandating this is how we want the repair done. This is what we're going to pay for. Body shops pushing back saying, well, we want to do this and it costs X. And that's kind of been the back and forth for decades. But the advanced driver systems, the limited self-driving tech that's out there has changed that we're starting to see OEs move into the repair space in the way they haven't before. So Caliber Collision's big repair group, probably the biggest one nationally, had a great stat. So they're seeing cars come into their shop. About 40% of them need, and this is national data, 40% of cars need some sort of calibration. And industry-wide, they're only getting about 11.8%. And that's making sure like the camera in the rearview mirror that makes the ADAS and the cruise control systems work is calibrated correctly. And one of the things they notice is if you get it off by like 1 degree, that system goes haywire. And so that's what the fight's about. All these new advanced safety systems, it's how do you make sure these things get back on the road in pre-accident condition and function as they're supposed to. And that's where the OEs are starting to move in, is they're trying to indemnify themselves from the liability risk of having one of these systems break or go wrong, or when it comes to kind of repairability of the car, they're like, we want to make sure this thing gets back on the road so we don't get sued. They're not really thinking about the insurance company or even the body shop when they're moving into this space. And so I think that's been a big change. And the way it's ended up playing out is you have carriers on one side, you have OEMs on the other side, and they're fighting kind of proxy battles through the body shops, through the glass networks. They're not really communicating at a high level. And I think that's something that we run into trying to deal with both sides that I know our contacts at IIHS have struggled with. And part of it comes out of just the OEMs are concerned about building cars, getting cars back on the road, safety, and competing with each other. Insurance is kind of a secondary thought. So that's one of the things I've heard from people is, oh, the auto manufacturers are going to use embedded insurance. They're going to take over. It's going to be like Amazon's coming in. And I just don't think that's true. I think you can look back to GMAC insurance, which GM ran from the 1920s until about 2006. It's now National General, which was then bought by Allstate. So it's not like they haven't had insurance arms in the past, but it feels like they're going to want to insure their products as an added revenue source. But who are you going to buy insurance from if you have a GM and a Ford? I find that tough, but I think it's going to continue. You're going to see more OEs get into the insurance space, but more importantly, they're going to get into the repair space, mandating kind of their own parts, trying to steer things towards their shops or their dealerships. Steering laws, of course, complicate that. So I think it's going to be an interesting time over the next 5-6 years as more advanced vehicles continue to make it on the road. How do those things get repaired? How do you deal with supply chain issues and a more aggressive OE who's trying to mandate how you want to repair these things?
So it's a really interesting point that you brought up, that it's going to change but not replace kind of traditional insurance relationships, because to your point, I'm not going to have 2 different carriers for my 2 cars. So that's just not realistic, but it is.
Those are the things Tesla ran into years ago is and there was a complaint from the California DOI, and this is not how it works anymore, but they wanted to only sell insurance to Tesla drivers. In California, you have to sell insurance to anyone you have to offer a price at least to anyone who asks. And so it's just that type of mindset of, we need to make sure we're thinking about this, not just as a, lifetime ownership value question, but if we're an insurance company, we're an insurance company. What's the way to go about that?
You can't pick and choose when you want to be.
There's a regulatory framework in place for everybody.
Exactly. So even if it's not going to necessarily replace traditional insurers, it is changing some of that behavior that you talked about.
Yeah.
So how do these impacts how does this impact shopping behavior that we see within the auto industry?
So it's all leading to higher rates. I mean, the question of how do you get back to profitability? I mean, I wish I could tell you there was some magic underwriting or claims practice you could do, but it's external factors. It's, you have inflation impacting investment returns. You have the kind of liability struggles as talked about with the courts. You have, people's behavior. It's hard to get people to slow down on the roads. We've been trying that for a long time. And it's hard to change replacement costs for cars. Parts are what parts are. That's something that's kind of outside the carrier's hands. So that's led to just people taking more rate. And as a result, people faced with more rate are shopping more. You match that with 15, 20 years of advertising campaigns. Some people, it's easy to shop for insurance. Carriers have made it easier to shop for insurance. And so there's a lot of people out in the market looking at the exact moment when carriers are pulling back on advertising and pulling back on their new business appetite. And one of the things I found interesting about the shopping behaviors today, and this comes from a TransUnion study, it's everybody. So across credit scores, and this is something I saw backed up by JD Power, by the various teams, by LexisNexis, is everybody's out looking. And that means that right now, having the right rate is more important than ever, because if you get it wrong, someone's going to get a flood of new business you might not want.
Well, thank you so much for joining me for the conversation. And I'd love to see some discussion around this in the comments, because I know this is impacting every single person that has a car. And specifically, I talk about this a fair amount in the interview series, but I also do TikTok content. And when I'm writing, or when I have videos about insurance tagged in TikTok, people will come at me aggressively about things like how insurance carriers are raising prices because they're greedy and da da da. And so I think this type of information and this type of education is really important for people to understand why we're seeing the raises that we're seeing, how all of these different factors play together and impact the rates that we see coming from our carriers.
Well, at least as someone who writes about insurance, they're not asking you what insurance they should buy. I get that too often. But yeah, I think the public, I get the sense, on the homeowner side with raising rates and with climate change, is a broad understanding of why. I don't think the same is quite true on the auto side. I mean, there needs to be more work done around speeding, distracted driving. I think CMT has a killer report this year on just how much more distracted we are. I mean, people are picking these things up crazy. And it's a problem. People are crashing more. Fatalities are up. Pedestrian fatalities are a problem. With bike fatalities, same way. I don't think the public has a broad enough understanding of just how much more dangerous the roads are today. And then just on top of it, a fender bender is no longer like a $25 bump out. It just costs.
And I think that's probably part of it. Everybody knows supply chain issues, because we're feeling the impacts if you go to put your car into the shop and it takes that much longer. Or we're seeing that in other aspects of our world today and how that impacts everything from ordering a couch to what type of cup you get at a restaurant, because they're having supply chain issues. But I think that complexity of every single repair is pretty significant. And unless you've lived through the experience of having the exact same claim on an older car that didn't have the same technology to what it is now, you don't necessarily have that that click of what it is.
It's a funny thing. So I was talking to somebody about insurance company claims websites. My friend Justin Suter at Corporate Insight, we were talking about this. You don't want anyone to be good at using your website, because that means they've had to file a claim a couple times, and that's bad.
Yes. Oh, that's a very good point.
But that's something, is people don't go through this all that often. We don't want people to go through this all that often, and that changes people's perspective. You might have three bumper incidents in your lifetime. And so just the perspective of how much does that cost, it's tough to get people to figure out. And you don't want people getting in car crashes all the time and becoming experts at auto body costs. I mean, that's
no. Well, and my friends make fun of me because I still have an old school car with like a key that you turn, and it doesn't have, it's got plenty, but it doesn't have every bell and whistle. And I did have a glass claim on my windshield pretty recently, and it wasn't that big of a deal. It was easy to get fixed. They were able to come do it in my work parking lot and take, whereas my husband, who has a car that's got the sensors and all the things, when he got a crack in his, it was multiple days not driving the car. It was much more expensive because, just as you were saying, the windshield had to be calibrated because there's intelligence that's a part of how that windshield works. And so, just like that small inconvenience that didn't feel like that big of a deal a year before when it happened on my car.
Yeah, it was a huge.
It was significant and frustrating. But had we not had that experience with my car previously, we may have blamed the auto body shop or all these other things.
Yeah. Well, one of my favorites is, and this is maybe 7-8 years ago. Safelite mastered we'll just change it in your driveway. You don't even need to be there. And then when they had to start calibrating, they were like, God, this sucks, because now we need to get the owner of the car out there to drive us around city streets, to drive us on the freeway while the tech sits with a laptop, making sure it's calibrated. And it was just, the customer experience was just fundamentally different. And it's gotten better. That was a long time ago. But at the front end of that, it just went from, we just swap out your windshield to, I got to sit with my laptop and make sure everything works. It took a lot of work. So it's a
well, I'm
changing
sure we
market.
could keep going for
Yes.
far more. And for anybody that's interested, these are the types of conversations that you guys have at your conferences.
You do?
But again, for anybody who's watching, make sure that you follow Patrick on social media so that you can stay up to date with both the newsletter and the conferences that are coming up. But thank you very much for your time and joining me for the conversation.
Great talking with you, and hope to do it again sometime soon.
Yeah, have a wonderful day, everybody, and thanks for joining us.